If you're self-employed or a business owner and your tax returns do not reflect enough income for you to qualify for a home loan, don't worry because there are other options available for you. Today, I'm going to explain the most powerful program available to entrepreneurs, and that's the bank statement loan. And by the end of the video, you'll know how it works, who it's for, and how it could get you into a home. My name's Ryan Olson. I've been a mortgage loan officer for over 13 years across multiple states, and I've helped people get into home loans even after traditional programs told them no. So the problem is for self-employed people, the tax return is not always the best indicator of the real income. So maybe there was a lot of expenses, a lot of write-offs, or maybe the business owner or self-employed person has not filed their taxes yet. And so for the traditional loan programs, the most common ones like conventional, FHA, VA, USDA, jumbo, they require the lender to calculate the income based on that tax return. And so let's say last year on your tax return, you showed like $200,000 in gross sales, but you had $180,000 in expenses. Well, that net income is going to reflect as $20,000. And that's what the lender has to go off of, that amount that's showing on paper that you earned for the business. So this is the problem that the bank statement loan specifically solves. Instead of calculating the income based on the standard tax returns, we can use the last 12 or 24 business bank statements, or in some cases, we can use the personal bank statements. So what we do is we add up all the qualifying deposits from the last 12 or 24 months within that business, and we'll assume that was the business's income. Now from there, we have to make an assumption that some of that income would be spent on expenses. So typically, we have to cut that amount in half and assume that half of the income that came in was used to run the business. And then that amount left over can be used as qualifying monthly income. So let's say all your deposits average about $20,000 a month. We would assume that half of that is used towards expenses, and your qualifying monthly income would be $10,000 a month. In some cases, if we can show that that business is using significantly less than 50% of its overall income towards expenses, we can use a lower percentage, and that would add even more income to the scenario. Now, I've seen many scenarios where a business owner tried to qualify the traditional way based on calculating income from the tax returns, and then we compared that to this bank statement loan, and the amount that they qualify for has doubled or tripled. Now, these programs do require to show proof that you've been in operation for at least 2 years, and that can be done through a letter from your CPA or usually a business license. The bank statement loan programs will allow you to put as little as 10% down, but it's much more common that anyone who's using these programs will put at least 20% down, because the rate gets a lot better for 20% down versus 10. I have had some rare cases where the buyer put 10% down on the bank statement loan. I broke down the difference in what the rate and payment would be for the 10% down and the 20% down, and a couple of those business owners were fine with the higher rate because they just wanted to keep those extra funds in their account, or maybe they just didn't have the availability to put the 20% down. Now, it's important to note that if you are self-employed or a business owner, it's not always the best option to use the bank statement loan. If your tax returns will reflect enough income for you to qualify for those other programs like conventional, FHA, VA, you should use those programs because they are going to give you a little bit better rate. But if you don't qualify for those based on how your income shows on your tax returns, the bank statement loan is a really great program because it can help you just flat out get into a home when you otherwise wouldn't have been able to, or it can help you qualify for a larger loan amount than you otherwise would have based on your tax returns. So these bank statement loan programs are going to be ideal for small business owners, independent contractors, freelancers, or really anyone who's self-employed or a business owner who has a lot of cash flow coming in, but they just can't show it on paper on their tax returns. And if you'd like me to take a look at your scenario, feel free to reach out. My contact info is in the description. We can start out with just a basic conversation. I can give you more information. And then if you'd like to apply from there, I'm happy to take an application and get you detailed answers on what you will qualify for. If you're not quite ready for any of that though, please consider subscribing to my channel for more tips.